Hi there traders, this is Steve Marley, the market chartist for FX Explained, and our regular weekly MacroWatch update for the week commencing the 28th of March 2022. Stocks surge as bonds plunge. Let's kick off with those macroeconomic and geopolitical developments that we've seen over the past week. Well, less dominated by the Russian invasion of Ukraine, as a lack of any significant escalation has seen a further shift towards a risk-on theme for global risky assets, notably stocks, since mid-March. This has been assisted by hopes from the Ukraine-Russian talks and from reported setbacks suffered by Russian troops. Global commodity prices have been mixed over the past week, but have to some extent resumed some upside price pressures after their downside corrections from their mid-March peaks. Markets are still concerned about inflationary pressures, however, from tight labour markets and elevated commodity prices, pointing to the threat of stagflation. A hawkish tone from Fed speakers, notably Powell hinting at a 0.5% rate rise possibility since the mid-March FOMC 0.25% interest rate rise, which has kept US and global bond markets in bear mode, pushing yields higher. US President Biden met with NATO, the EU and G7 leaders in Europe and delivered a strong message to Putin, with sanctions on Russia tightened. In addition, the US has agreed a further 15 billion cubic metres of liquefied natural gas in 2022 for Europe in order to reduce the EU's dependence on Russia. The important global data was mixed last week, but showing still positive signs despite the conflict in Ukraine. US durable goods orders missed expectations, but the global market flash PMI data were overall higher than expected. UK inflation hit a 30-year high in February as CPI rose at a 6.2% annual rate, above the market consensus. And also in the UK, the spring statement provided little that was not expected, with modest cuts in national insurance contributions and fuel duty. Now let's take a look at the global financial market developments and impacts from the week ending the 25th of March 2022. Well, equities higher, strong recovery from the US stocks in here, led actually by the Nasdaq. S&P 500 notably higher for a second week, a strong recovery from the February lows, rallying from March lows over the last 2 weeks and pointing up towards February peaks and maybe even aiming back towards the highs of the year and the all-time highs. European stocks were more sideways last week, but still positive, having had a strong rebound rally the week before and are still pointing higher. US and global yields surged with concerns of inflationary pressures and also a more hawkish tone from the Fed. But currency markets were somewhat subdued and mixed actually for the dollar. So the dollar was sideways against the euro, having had a significant sell-off through February. Since February, we've seen an erratic sideways theme for EUR-USD. But dollar yen has surged higher with a more hawkish Fed and that zero rate policy in Japan, meaning the interest rate differential only set to widen there. So dollar yen surging higher, and also because of the shift towards more of a risk on theme. And Australian and New Zealand and Canadian dollars, the commodity currencies, still very bullish against the dollar. So Aussie yen has actually been surging higher, but Aussie dollar here also pushing notably higher. Gold in here has rebounded, having had a significant sell-off through mid-March after that early March surge to a blowout top. And although gold has pushed back higher, we're not looking for a move back up to that blowout top level, but nevertheless a positive tone at the moment. Oil, however, has had a stronger rebound, having also put in a blowout top through the first half of March. And there is now risk that we're going to move back towards that blowout top potentially into April. And on the copper side, a solid consolidation theme last week, having re-energized back to the upside. We had that bullish breakout in the early part of March, breakout from the range. Then a notable setback, rebounding the week before last, and a solid consolidation, trying to resume that bull breakout. Now let's take a look at the week ahead, the week commencing the 28th of March 2022. We're still going to monitor for a possible military escalation in Ukraine, but also closely watching for potential for the Ukraine-Russian talks to improve and maybe even closer to a ceasefire. There's an OPEC meeting on Thursday, so OPEC Plus meeting that is, so we're going to be watching that. And just to note that Europe has switched to daylight savings time as the US did a couple of weeks ago. So the differential to the US between Europe and the US is back to normal. On the central bank, fairly quiet this week. We get Governor Bailey of the Bank of England speaking on Monday. And we get various Fed speakers through the week. And let's take a look at the data. We get Bank of England Governor Bailey speaking, as I said, on Monday. Tuesday brings the Australian retail sales numbers. We get German CPI, US ADP, employment change, US GDP and PCE all on Wednesday. And then it really starts to get busy with UK GDP, German retail sales and unemployment, that OPEC meeting and US PCE data all on Thursday, and a very, very busy day Friday with global market and US ISM PMI data, and also the always much watched US employment report. I'm going to wish you all a great trading week. If you like what you're seeing here, don't forget to hit that like button and also to follow us on our YouTube channel. And I'll be back with you next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.